credit. We're having all the, oh,
I can move on there.
yep. Oh, there's everybody.
Hi, Ryan. We have on the Zoom today, we have Ryan Miller. She's the state rep for Blue Cross Blue Shield that would handle your market segment for this if you were to move forward. And then we also have Cassidy with difference card, the one that's helping fund those cards for first dollar coverage for the employees. So we thought just having them on in case there's any specific questions. And then Ryan Miller, of course, she's been there over 20 years and she's a wealth of knowledge on the OPH&W program and, obviously direct Blue Cross. So any questions that come up, she will know how to answer.
Have you talked to Lee? Is he coming?
I talked to Lee yesterday and he said he was coming, but I haven't talked to him today.
I'll wait a couple more minutes.
Good morning. I'm sorry. This is Ryan. I'm sorry I'm not going to be able to be there in person today. I'm in Tulsa at the National Association of Business and Insurance Professional Spring Symposium, getting some CE credit. So I apologize.
Thank you.
Thank you for joining us though.
No problem. I am the Blue Cross and Blue Shield rep for the state of Oklahoma. I work in the small group and mid market size, so anything 2 to 150. So I wanted to jump on. I don't represent OPH&W. I don't work on that account, but I am familiar with the program. I'm familiar with what it offers, and I'm familiar with obviously the Blue Cross benefits coming off the program. If you have any questions, just let me know. Otherwise, I'll listen to the presentation.
And I'll introduce myself as well. Hi, everyone. I'm Cassidy Lutoski-Meyer with the Difference Card. So I know the Hub team is going to take us away on all of the details they're planning on covering, but I'm here for any questions related to the funding mechanism that we're looking at pairing with Blue Cross.
Thank
We got to start. They were just introducing themselves.
Oh, you got it.
That's 2 minutes late.
Yeah, blame it on me this time.
No, not your fault this time. It's 100% me.
It was just the Blue Cross and Blue Shield rep and the difference card rep. They introduced themselves.
Okay, great.
They're listening today.
Well, fantastic. Well, welcome to our meeting.
Hello, thank you.
All right, if you guys are ready, we'll get started. Then we can talk about whatever we need to on here. So we'll call this to order. We're all three here. Again, sorry I'm late. Let's pray.
Heavenly Father, we thank you, Lord, for being with us. We thank you, Father, for keeping your protection upon us, our constituents. We ask, Father, your blessing upon this meeting. We ask it in Jesus' name. Amen.
Amen. Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Before we get started, are there any citizens' comments? Anybody on Zoom that wants to chime in?
Doesn't look like it.
All right, well, let's talk about the contract with Hub.
Okay, well, we have created you on larger paper, the same presentation we went over last time. We had our office manager try to have the biggest paper that would work in our printer for you. So, what we did was kind of just based on our conversations have consolidated it down to one page of options. So, we have the Stillwater plan paired next to your Diamond Choice, and that's one of the things we'll work through with you is how. For the 44 that you show had any, I think it was 44, that had any claims in the Stillwater network last year, how important is that going to be to them versus are they wanting to do the other plan and get more money in their bucket of money? And so we can, structure this however you all want. We've showed you options. Every option actually gets it under their out-of-pocket maximum with OPH&W. So no matter what, every option on this piece of paper is less cost to the employee and their family members when they use their insurance. So that will be up to you if you want to move forward with this. We can work with Cassidy of Difference Card and use any bucket of money that you prefer. I would think as your consultant, that if you're giving them that option to have $4,000 covered, that option two, I would assume most employees gravitate towards that. I mean, it's pretty attractive to be told that the first $1,000, first $4,000 of your medical bills will be covered. That's a great benefit for the employees. So,
Of the deductible?
Of the total out of pocket.
mhm,
So,
we can
yeah,
go
go
through
ahead
that.
and go through plan two, and let's
Yeah.
that's a great one to go through.
The way that your plan is structured today is that first column, the OPEH and W, diamond choice. So if I'm an employee here, I have, let's just talk about employee only. I have a $1,000 deductible. So if I start going to the doctor, paying for prescriptions, all of those things, I'm going, or stay overnight in the hospital, I owe the first $1,000 in my medical expenses. Then I start cost sharing with the insurance company, all the remainder of the bills coming in. And my out-of-pocket in any calendar year is $7,000. So if I have cancer, I have major medical, I will owe $7,000 in my calendar year, and then Blue Cross pays 100% of the bills after that. So with the concept of giving employees difference card with Blue Cross is they pay the first $4,000 of medical claims. So before me as the employee even has to start paying a single dollar, I have to accrue $4,000 in costs on that plan. So then that drives down the employee's out-of-pocket exposure to only $2,600. You'll see in that third column where it says Plan 2 non-Stillwater with the $4,000 difference card. So then I have dropped my out-of-pocket exposure from $7,000 down to $2,600. So that is a huge increase in benefit on that plan.
So no matter how bad they're in the hospital for a year,
Mhm.
2,600 is all they pay.
Yes, yep, so in that example I gave you on Blue Cross, their maximum exposure is $7,000. Blue Cross pays 100% of the bills after this. On that plan that we just talked about, same scenario, 2,600 is their maximum out of pocket, Blue Cross pays 100% of the bills after that. So you're dropping their out of pocket from 7,000 to 2,000.
That's the non-Stillwater plan.
Yes,
With the Stillwater plan, it shows they
We-
pay up to $4,100 out of pocket.
yes, exactly.
Okay.
So that's kind of where we were thinking, since a majority of your group didn't even have a claim in Stillwater, just how important is that to them versus not? That's why we can have more than one option. We can have a Stillwater plan and they can make that decision.
But it still shows that our cost for a Stillwater plan is cheaper than the non-Stillwater plan.
Exactly. Yes. It's because you're adjusting the bucket of money they get.
So I just wanna add
Yeah.
on, because that Stillwater plan, we have it set up, it is a higher out-of-pocket maximum, so there is. Just based on the difference card paying the first 2,000, and like Caitlin said, we can adjust that, but it's 4,150 towards the rest of the deductible. And then there's co-insurance after that, depending on if they go to a preferred provider or a choice provider. But so the total out of pocket, including deductible, 6,350 for the member. So, but that's where we could adjust the difference card benefit if you wanted to cover more on that, so.
Okay.
But just wanted to point that out, it shows 4,150 for the deductible, and then down below, there's 1,200 remaining out of
So
pocket.
even on the Stillwater plan, instead of paying $7,000 in pocket, it goes down to 4,150 out of pocket. So every option on this sheet is better for the employees as far as what they would have to pay.
Okay, so once they hit the 4,150.
Blue Cross pays 100% of the bills after
They
that.
have another share after that.
Correct.
Okay.
Yep, so you're taking their maximum exposure down, what they would have to pay in any calendar year.
But that's with the $2,000 difference card. It'd be cheaper if we did the $4,000 difference card there.
Right,
Well, yeah, the employees would have a much better benefit.
it would adjust the rate, the total rate, because you're covering more of the difference card, but yes, we can get that quote based on if you want to increase, because it is. Technically, once they meet the 4,150, that's the deductible, then they pay 10 to 20%. Up to an additional 1,200, so 6,350 on that one is the actual total on
The
it.
10,000 minus the card.
No, that's after the card.
So okay,
Cause it's 68, or it's 7,350 total out of pocket.
That's only if they did every single claim on Blue Choice.
Right.
Which would not happen.
Right.
So I would look at this as the 6850.
Yeah.
So then you're taking $2,000 off of the 6850.
Yeah.
So if they did everything at the Stillwater Hospital,
Absolutely everything, then it would be 7,350 minus 2,000.
Still better than where you are today with the 7,000 combined. Yeah, I think the key thing about difference card when I first saw it was, I'm going, why would you ever pay first dollar HRA money? It made no sense to me. And then I sat through one of Cassidy's presentations and we're looking around the room. And I start realizing, I think about my healthcare, I've never spent $3,000 in a year, ever. And I start thinking, okay, when we look at a medical plan, you're always going to have high cost claimants. Everybody does. That has chronic illness, expensive meds, everything else. In the traditional sense where you are today, and if you were just in a traditional commercial insurance program, that everybody has to start sharing cost and making contributions immediately, even if you're healthy, right? As those high cost claims go up, then that is then spread back out over everybody else, either through plan design changes or cost increases. The difference card really does reward the people that aren't spending a lot of money because now they're not spending anything out of pocket. And your high cost claimants are still protected by a lower out of pocket maximum. And even when you run out of that money, let's say someone's in plan 2, I'm going to keep the math really simple for me, and they have $2,600 to meet that out of pocket maximum. They ran out of money, but they're on a script that costs $2,000 a month. Difference card is still going to pay 80% of that $2,000 a month, even when they're out of money, until they reach that until they reach that 2,600. So you're still giving them the protection. If they go inpatient, doctor visits, x-rays, outpatient, things like that, that's where their 2,600 comes in, and then 20% of their prescription cost. So it's still a tremendous benefit. And I think, what we've seen with this is the advantages that the employee sees, especially the ones that are just going to get normal care, a prescription here, a doctor's office visit there, beyond what comes out of their paycheck, they're swiping the card and nothing's coming out of their pocket again. So.
okay. So let's say I'm on plan 2 and I go, I end up not.
Okay.
Am I going, after I swipe my card, am I going to get a separate bill from the ER later?
So what actually happens is when you walk into the doctor's office, you hand them your Blue Cross card. That's all you do. You don't pay at the time of your visit. So they'll look at your Blue Cross card and it says it's a high deductible health plan. So they don't even ask you to pay anything. There's no copay on the card or anything. They submit the claim, the provider does, to Blue Cross Blue Shield. Then you get an explanation of benefits and a bill from the facility you used, and they should match. Exactly, that's the way it works. Then when you get that bill and you verify it matches your EOB, which we also help with that if needed, then you pay your bill with your difference card.
Okay.
So it actually is easier for employees in that sense too.
And if you're going into the pharmacy to get a prescription, give them the Blue Cross card, they'll pull it up. When they tell you what you owe, swipe the difference card.
Yeah, at the pharmacy, you can actually pay because it's a point of service sale. Likewise, when it's, a medical claim that has to go through, okay, what is Blue Cross gonna pay towards this visit? They do that whole rigmarole behind the scenes, and then you get it, what it is.
Okay, and are we gonna run into what a lot of insurance companies do? We don't want you to take this prescription, we want you to try this one and this one first.
Right.
Will it pay for the one even if the employee says, no, I want to take the one with
It's a very similar process. So right now you all have Express Scripts as your pharmacy benefit manager. When you move to Blue Cross Blue Shield, they use Prime Therapeutics as their pharmacy benefit manager. So what I've actually done for another county, and I think it was either Ryan Miller or Dina Pride, her counterpart said, you can order a prescription file from OPEH&W. They actually, Dina Pride, who's working on some of the other municipalities, sent me the heading of what OPEH&W can send back to you. Then we are checking all prescriptions because we want to know in advance, is there any employee that's taking any medicine that's different formulary wise from Express Scripts? Some of the times we'll find that Prime Therapeutics has a better program for that specific drug, but there may be a few that they have a preferred brand name versus Express Scripts preferred brand name. So we can actually check that right now, just so we know going in. But it's an open formulary with Blue Cross. It works the same way. If it's a high cost medication, sometimes they'll ask for the doctor to say, did you try these first? It's called step therapy. That happens with every pharmacy benefit manager. So it should work very similarly. And then the other thing we can do is any employee that has already gotten their medicine pre-authorized, if OPHW releases that, Blue Cross Blue Shield will actually look at that and say, oh, they've already gone through step therapy and prior auth, and we can apply that moving forward. So we do all of that work in advance too.
And the formularies are, it's a valid concern. It's one of the most important things you'll hear about initially is the prescriptions. But formularies change and are updated every 6 months on every PBM. So if you've ever been on a medication and you'll get a letter mid-year saying, hey, we're not going to cover this anymore, effective on this date, you'll need to get with your doctor and shift to an alternate prescription. That happens on every single one, 2 times a year. Okay.
So I will tell you too, what I like about this as a consultant is the fact that every employee is given the message, you have $4,000 to spend towards your medical, and we're reducing your out of pocket. The employees that don't use that whole $4,000, it goes back to the county. So that if you do have a bad claims year in 2 or 3 years from now, all those monies that you budgeted for but didn't use stay with the county. And let's say that Blue Cross says, you know, you have a 10% increase coming on 7/1. Well, you've got a fund of money reserve built up. And then you can say, we're still going to keep your employee only premium at 0 because we can afford that. So I think it's long-term a protective way to run the program with reserves.
Who keeps that money?
You do.
So it comes, after
Yeah.
it comes back to us, we
The
put it in
county.
the account.
Exactly.
Okay, so it doesn't stay. Plan.
Yeah.
Yep, and there's no, I'm just piping in real quick. Those funds, those reserves are 100% your dollars. So sometimes people are like, that sounds too good to be true. So just to clarify, you don't have to renew the difference card. And within 90 days at the end of the plan year, that will be sent back to you if there's reserves in that account. And those can be used for claims for the next year. They can be used in whatever you would reinvest in your employees, whatever you want to do. Those are your dollars at 100%, and those will go back to you. So you could not renew with the difference card. Those will still go back to you.
So plan starts July 1. The next year we get the check by the end of September.
That's she's meaning if you leave difference card, like if you didn't want to renew with it. Yeah.
Maybe walk through what happens with reserves from 1 year to the next, assuming they renew and assuming they don't.
That's completely up to the client if so say they renew, it's a case by case basis. We have groups that say we want that cash back on hand for us. And then we have other clients that say, let's just keep it in that claims reserve account because we're going to use the difference card again. And let's just forward that to the next claims year. So those are 2 options. If you stay with the difference card, most people do stay with the difference card, but if you don't, like if you decide not to renew, those will come back in the form of a check to you, those reserves within 90 days at the end of the plan year. And some of that's to allot for some sort of run out. So claims that are lagging, we want to make sure that those are taken care of as well. But that 90 days is when you would get that back in the form of a check.
So you get to make the call at that point.
So from year to year, we say we stay with that difference card.
Mm-hmm.
We could choose to leave it in the system for high value claims
Mm-hmm.
and not have a rate adjustment, or we could have it come in and use it for the rate adjustment.
Exactly. Let's say that Blue Cross Blue Shield has a bad book of business renewal and they say we're gonna have to do a 10% rate adjustment on your group. Then those monies back in there can go to fund that and you can keep the employee at 0.
Okay.
And that's in the case that the account ends with a reserves in it. So there's a surplus. So you've, overpaid into that account, that money goes back to you. On the flip side, say you pay out more in claims than what is funded in. You're still protected with the difference card. So we take on that exposure for that cash flow. And if your max that we set is your max. So you're not going to spend more than that. And we're placing a guarantee on that. So it's kind of the top and bottom way to think about it. Reserves, you get them back at 100%. If you go over and there's no reserves in the account, which 80% of our clients end with a reserves in their account, then there's nothing more you have to do. You're protected with the difference card.
The end of the year, what you're saying, at the end of the year, if claims outweigh what we've paid in, we end the year at a zero balance,
Mm-hmm. Correct.
guaranteed.
Mhm.
But it doesn't mean
Guaranteed.
that our next year rates won't go up though, right? That probably would mean our next year rates would go up.
So for the renewal process, I'll confirm this, but it's usually a pretty nominal increase. I think we're typically seeing around like a 10% increase, like at a max. But after there's X amount of months, it's 24 months, and then you're fully vested. So for those 24 months, you're good. And then we, look at that renewal process.
What percentage of the premium is difference card? If we look at that, it's a small amount compared to speaking, right?
Oh, yeah, yeah, the BPM on difference card, I think you said was $200.
So that 10% Cassidy's talked about would apply to approximately $200 a
So
month.
$20.
Yeah. So it's not.
So it's like I don't, because it's based on each plan, and like, for example, this one is $798 here, it's $590.87 for that employee only tier, but. Cassidy, what's that on the plan too, the one with the $4,000, what is the guaranteed PEPM?
With everyone on the $4,000 plan, or
I mean, I know what it is, if everyone's on the $4,000 plan,
We have that, we just.
then it's, 236.21 PEPM.
Okay. So if
Yeah.
we think about it that way, let's say that you're not one of the 80% that has reserves. You bust through it, you had a bad claim year, all the employees were using their insurance, then you're gonna get, let's say, a 10% raise on 236. So that's $23. Then also the other great thing is with Blue Cross, you've bought your Blue Cross rate from 903, which is on Health Choice. OPH and W. If you got a 10% rate increase again on 903, that's $90 that you'd be paying extra. So you're already bringing down your fixed costs. With Blue Cross Blue Shield, you bought a plan that only costs $590. So you get a 10% rate increase on that, it's $59. So those two still add up less than getting a 10% rate increase on your 903. So the idea behind difference card is you are buying less insurance from Blue Cross. Because right now you are paying $903 per person to have a $1,000 deductible with $7,000 out of pocket. The idea behind difference card is let's buy less insurance from Blue Cross. Let's get the rate from 903 down to 590. Then with that savings, we can fund the employees who are actually using it to have those dollars. Instead of now you're funding 903, whether employees are using it or not. Some employees don't, they stay healthy and they just go for strep throat once a year, but you're paying $903 for that person. That's not really maxing it out. So why don't we buy a $590 plan and then we use the difference in that to give the employees who do truly need it money up front to cover their medical bills.
Where you give them the $590.
It's on page 2. So that plan that you all are buying, that we're putting difference card on, is $590. So instead of giving Blue Cross, that's in the the plan 3 HSA, that $590 down at the bottom. So instead of giving Blue Cross $903 a month per person, you're saying, I'm only gonna give you $590 a month per person, and I'm gonna use that savings to fund claims. So you're buying less insurance because not everybody's using it.
So you're essentially self-funding a small layer at the very first of everybody's deductible and out-of-pocket phase. And we've done this for years with plans, and historically we've had to do this where We have to get deductible and out-of-pocket reports. We have to model out likelihood of this many people hitting it. What do we need to be prepared for? And then when those people hit their maximum out of pocket, when they go to the pharmacy, they were just on their own. So that's kind of been the downside to an integrated HRA historically. Difference card enters the market. They're looking at it, they're underwriting it, they're guaranteeing it. So we know worst case scenario, what's your cost for a year? And we know that when those people hit that out of pocket phase, when they still need prescription drugs, they're going to get 80% coverage. And that's one of the big reasons we partnered with the is those are just some intangibles that we can go out to a group that isn't fully ready to be funding claims and have an unknown liability out there, to be able to give them a fixed cost and know exactly what that expense will be, and also know what the benefit will be for the employees.
And I can tell you too, that our offices around the nation, they've been doing a medical expense reimbursement plan for a long time. Oklahoma, believe it or not, we've had a lot lower rates than a lot of the other states. And so they have had to get creative and do these sorts of things much sooner. But now that I can't imagine that now we're paying $1,000 to insure one employee. I mean, that's crazy. But 10 years ago, we would have thought that was ludicrous, but now here we are. We're getting $1,000 to take one health insurance plan. So we've got to stop that. What can we do different? And that's what the medical expense reimbursement plan does. So let's stop paying Blue Cross $1,000. Let's pay them $590 and then use that money to fund claims because we think we can come out ahead.
So $590.87.
Mm-hmm.
We got $400 less deductible for one individual.
Yes.
And there's no charge after the deductible.
Right. If the employee meets that 6,600 total out of pocket, Blue Cross pays 100% of the bills after that.
How much goes in? It says HSA, so how much goes into the plan?
Well, that's the plan you're buying from them. That's on the first page. But the difference between 590 and 903 is what difference card underwrote you on to give everybody the 4,000 up front.
So that's an HSA eligible plan. And it's
Okay,
much more of a title, but by putting the difference card on, it removes that plan from being eligible for new.
Okay, so the base plan is $593. And the $300 or whatever the math is above that goes into the different card.
Exactly. Yep, that's what we were talking about, instead of buying that 903 plan, buy 590, and then that difference is what difference card is using to make that calculation for underwriting.
Got it. So we'll get a percentage, whatever that may be, of that $300 back at the end of the year.
Yep, if all the employees don't use it like they underwrote you, then reserves. And Cassidy said about 80% of their groups in their whole book of business have a reserve. So 4 out of 5 chance. And then let's say that you are, one of the 20%, you're gonna get let's say 10% rate increase on 590, a 10% rate increase on the 239 or 236. If you're still under a 10% rate increase like you would have gotten on the 903 plan.
My opinion is it's a better benefit, plus we're saving money. Or could save money, because we get the money back.
What about retirees?
What we decide on those.
Retirees,
So those who are under 65 can be on this plan. Over 65, my understanding is they're on a Medicare supplement.
and they use Oprah's stipend of 105.
Yes.
So that should all be the exact same.
And we can put, because I know there was concern about the spouses of retirees. We just have to make sure that it's in the plan language that they're eligible.
And Ryan, I will defer to
And they were
you, since you've been working on a number of these and historically ones that have come off. Anything you would like to add on retiree benefits for under 65?
I mean, if they're retirees and they're under 65, my understanding is they stay on the group medical plan. When they turn 65, you put them, I don't have anything to do with OPERS. I know what it is. There's a stipend involved. Some of the counties have retiree benefits. Some of the counties have moved away from it and said, we're not offering it going forward anymore. They obviously keep the ones that are on it active, and that's really up to you guys. But the under 65 definitely stay on the medical plan. And I think they take, I don't know much about Medicare, but I'm guessing they take Medicare A and then we're a supplement to that. But they don't have to. So they can stay on just like any other employee as long as they meet the definition of the retiree benefit. And when we write the business, we will need the definition of your retiree. So, sometimes it's like years of service plus age has to equal 75 or whatever it is for you guys, but we'll just add that into the contract.
Thank you.
And you have, did we quote is there 2 retirees, did you say, on the plan? Okay. And we
under
put
65, I think there were
There's
4.
4.
Oh, no, there's 4. Yeah.
and they were on the census included?
Yeah.
Yes, they
Okay.
were.
Okay, that's all. Yeah, then we're good.
Yeah.
Right now, are our retirees paying the same premium that we are?
If they're under 65, yes. They're over 65, no, because they're putting them on Medicare A and B. And then they're doing the Medicare Advantage plan with them. So depending on what they choose on the Medicare Advantage, and then OPERS pays $105 of that, and then they have to pay the difference. So depending on what Advantage plan they pick is how much, they're all different, so I don't know to tell you how much they are.
They've got a variety of different drug options in there to put on there, which is a big variable on the rates, so.
And we subsidize under 65, they pay 400 a month or 600 a month.
No, they pay full amount right now.
So the retiree pays the full amount until he hits 65, and then we kick in and
Yes.
it's like 40 a month or something. That's
Yeah.
what they pay.
Because they moved into the Advantage plan, not the plan that we're on.
But the county's not paying it.
Not 365, no. So they pay the full $903 is what they pay if they're under the age of 65, what we pay to have and they have the exact same insurance as us. So we don't pay any of theirs if they're under 65. If they're over 65, we still don't pay any of that. They, OPH&W makes them go to Medicare A and B. And then depending on which Advantage plan they choose, it may make them go to Part D for their drugs. But if they don't, and that's why, they'll push them over to the Blue Cross Blue Shield Advantage plan, then OPERS sends them the $105 and they pay the difference. Everybody's total is different because it's depending on what they chose.
Right. Somewhere I had heard and thought that that the county kicked in money, or that OPERS really charged us on the backside and made it cheap for the retirees, but that's not the case.
No, not that I'm aware of, no.
Okay.
I've never paid them anything.
Okay.
So this retirement plan I'm assuming would work the same way. They pay the full deductible, until but would they be eligible for the difference card?
Again, that's up to you all.
So we would have to pay their their difference card?
If you choose
So-
to.
Yeah, so the rate to have that plan, right now, they're paying, well, yeah, you can pick, but right now they're paying $903 to have a 7,000 out of pocket. And then if we put everybody on that plan, it's $885. So you could still fund the difference card for them, or you could say,
But they're paying the $983,
Actually,
correct?
they're paying
So
for
you could just
the
charge them $885.
right,
And they're paying their own.
but they get access to the $4,000.
Right, they would get the
Yeah.
same thing active employees would get,
Mm-hmm.
but you would
Yeah.
just charge them that. full.
Is the employee actually paying the insurance company, or?
They pay OPH&W.
Yeah,
The retirees do.
yeah, okay. And they would, so if we move, they'll move with us.
They will be on the Blue Cross bill that you get, but since Blue Cross isn't gonna take their payment separately, we would need to talk with you. It would kind of be handled like Cobra almost. So if an employee leaves in a private business, and they take Cobra, it's their responsibility to send their premium check once a month. And if they don't make their premium payment within the grace period, then, you know, you can turn them from the plan. So we would just need to talk to the 4 retirees. Hey, we're doing things a little bit differently now, and you do owe your premium. Which just like they do now.
Yeah,
Yeah.
they just mail it into OPHW,
Exactly.
they could just mail it into me and I can put it with our invoice. It's just a change of address, basically.
So are we gonna have to accept that employee's money into our account and then write one check? Or are you gonna accept a check, a second party check? We're gonna mail you our county one and Joe
I
Blow's.
understand, yeah. Ryan, do you accept checks? If the county pays for all full-time active employees, would you accept checks towards their account if it's made
Yeah,
out?
we could do it either way. We can do one check for the whole county. We can do 2 checks because there's a lot of counties that have like a rural water district has a check and then the county has a check, or, you know, the jail. Just make sure if you pay in multiple checks, I would say make sure that the you know, the statement, like photocopy it or print 2 of them, just so that we may, and then put the group number on the check so it gets deposited to the right account. But you know, your bill, you can pay it online, you can pay it mail, but you can go in online and print 2 or 3 bills and just take that statement and put it with the checks.
Would Blue Cross go ahead and make a subgroup bill that has the 4 retirees on it?
Yeah, we could categorize the bill however you want by, you know, location, retirees, non-retirees, etc. We'll just have to set that up on the census.
Yeah.
That would be perfect.
Yeah. So if there's no more questions on that, the next thing I do want to talk about is Insure Oklahoma. Okay.
Yeah.
I have one.
Oh,
question.
yeah, of course.
Because my spouse is on my insurance.
Okay.
Okay. So I will, for her 4,000,
Mm-hmm.
I will still be charged that like the county is for.
Yep, so the employee spouse rate, if you chose the $4,000 bucket of money, is $1,912.59. So the county would pay $885 towards your cost. And then if they're not paying anything towards the spouse side, you would just do the 1912 minus $885 on your portion.
And also for if you're enrolled as anyone with dependents, so employee spouse, employee child, employee family, then you would have a bucket on the difference card. If we're talking about the 4,000 example, you'd have a bucket of 8,000. So you'd have a ×2 benefit for you and your spouse.
All that money be used on one person?
There is no bearing on us how it is used. So it could be 80-20, it could be all on one person, it could be 50-50. It's however the family sees fit to use those dollars.
If the worst outcome, my spouse gets sick, I can use all 8,000 on them.
Correct.
Yeah, but you're gonna be protected on an individual. On the Blue Cross plan of no more than 6,600 total out of pocket on an individual. Combined, if both people have a lot of stuff going on, it's 13,200. So then if you back the 8,000 out of that, now that family has a total exposure of $5,200 for that year.
Instead of 10,000.
Yeah.
Well,
And today they have 14,000.
actually they have.
14.
It's 14,000, yeah, 14,000, yeah. So that's better too.
Did that answer your question?
I think so. But she can't use my 4,000.
She can.
She can.
Without getting her own 4,000?
It's lumped together as a, when you.
No, she can't, she's not on the insurance, she can't use it.
I mean, if she's on the insurance,
Right.
Then 8,000 goes to both.
If you enroll with a dependent, and what Cassidy was saying, if you're an employee only, you're gonna have a bucket of $4,000. If you're enrolling with one or more dependents, you're gonna have a bucket of $8,000.
and she can use the whole 8,000 if she has.
Yeah.
Oh,
But her maximum exposure is 6,600 as one person.
As an individual, so.
If
Oh,
she pays-
6,600 she can use.
That,
Yeah,
yeah.
because she would max out the plan, Blue Cross would pick up 100% of the bills,
Okay.
yeah. So then,
So would that leave 1,400 if he needed it?
exactly, Yep,
there.
exactly.
So, and we normally see in a household, if we have chronic conditions going on, it's normally one person, it's rarely both. We've seen both, but rarely it's both people. Most of the
At the
time,
same
it's just one
time,
person.
yeah.
Why is the spouse $200 more than the employee?
The way that they underwrote it. Because the census data that Blue Cross Blue Shield received, they found more, risk on the
With the
spouses.
spouse?
Yeah, they underwrite each, person, each division, each age group, each bracket, and their book of business trend as well.
And so then you also think just demographically, your employees only, you've got young single guys probably on working at the county coming on, but then the people that are covering their spouses, the spouses are older. And if they're females being covered and they're under, say, 45 years old, that's from a medical actuarial perspective, that's the most expensive females are because of childbirth, everything else. That dynamic flips, when they become older than, 45 and older, they're less expensive. Men then become more expensive. So that's likely what drives that rate. Because if you look at the Blue Cross rate, that's consistent with what you're saying. It's $200 more roughly. And it's just the demographics and averages up to the spouses that's on the plan.
You said OPH&W makes retirees over 65 switch to Medicare. Will they still qualify for those Medicare plans, or are they gonna have to continue to purchase the expensive plans?
They should still qualify for Medicare. Medicare doesn't have anything to do with the
larger bill, even after they're
Yeah.
65.
Yeah.
They should still qualify. I know we have several OPERS accounts that are not on OPH&W, or groups that have OPERS that are not on OPH&W. That should have nothing to do with OPH&W.
Yeah, and Blue Cross's pharmacy program is deemed a creditable program under Medicare, so there's not gonna be any penalty for them coming on to Medicare Part D. They need proof of creditable pharmacy coverage leading up to that. The Blue Cross plans are creditable, so there's no extra penalty that they would have to pay on that as well.
That's good to know.
So if a spouse goes to the doctor, this is like a stupid question, just trying to clarify, goes to the doctor and has, like you said, they just give the card
Blue Cross.
and then you pay with the difference card when you get the bill.
Yes.
Okay. So we just continue paying that difference card, then when the spouse's runs out, then you switch to the employee's card if they haven't used theirs to pay her.
It's one
It's
card,
all on
like
one
the-
card.
Oh, one card.
Yeah, for your
Or you can have a card, she can have a card, but for the whole family, it has
8,000.
the whole 8,000 balance.
Okay.
Yeah.
Okay.
I mean, you can both use it throughout the year. You go to the doctor and swipe it, she goes to the doctor, swipe it, and your bucket of money is 8,000. So it just deducts from that every time you
Okay.
pay a bill. It's combined and lumped into one.
And if
But
anyone has children, those are linked under the age of 18, those are linked to their card. And if they have a dependent that's over the age of 18, we can send a separate card to that dependent as well.
And they can also, if they don't wanna use their card or can't find it or whatever, and you end up paying it with one of your other cards, you can submit a claim on the difference card site or app and get reimbursed.
Okay,
Via
yeah,
that
yeah.
or direct
Yeah.
deposit.
yeah, that's the
You're
I
like,
would do
which
that.
card am I using? And then you just
Yeah.
use one or
Yeah,
whatever.
I would do that first.
We had that question at another group the other day.
We did that with the other card, whatever card that is we have
Like your
now.
FFA or.
Because Kim will be like, oh, I forgot to use that one.
Exactly.
Yeah.
So then you gotta do the filing.
Yeah,
Okay.
so you can just file for reimbursement.
Okay, thank you.
Yeah.
Another thing that's comes up a lot with us is we have, I don't know, 10% of our people never use insurance. Some of them it's against their religion, some of them are travel,
Right,
have other options. So we're paying for a benefit that they're never gonna use.
right.
So with the $4,000 card, when we get that back, have you ever had companies give that as an incentive to the employee for either being healthy or not going to the doctor for whatever reason?
So that's a double-edged sword, because Blue Cross is underwriting you based on them being on the plan, paying in premium, but they're never using a single claims dollar. So they're a great risk, because they're just going to their tribal facility. So if you start peeling off those people, and let's say that they're the healthy ones not using your claims dollars, that could drive your rates up with Blue Cross. And so now, instead of paying $903 for them, you're only paying $590, and they're not gonna spend a single dollar on the card. So, but, if you can identify exactly who you think that subset of people are, that they say, I don't use your card, I don't even want the insurance. We can certainly underwrite it with them not being on the plan to see if that's a negative impact or a positive impact. If you say, all those people are, 50 plus males, let's say, Blue Cross underwrites them as an unhealthy risk, then that's probably gonna help your rates. But if you say, oh gosh, all these people that say they're always healthy and they're 26 to 40 males, that could hurt your underwriting.
And so when a carrier looks at your population and you say, we pay 100% of all employees that meet the definition of being eligible, which is full-time, 30 hours a week, met their waiting period. It's kind of an underwriting rule that they expect to see all eligibles if you're not charging them anything. So we've had groups that charge 50 cents a month, $1 a month, just to allow that waiver to happen for them to go, do I want to have this or do I not? Again, to Caitlin's point, we would need to just re-rate it, but that is something, that would be my recommendation, to give people the opportunity to waive off of that coverage and just say, we're never going to use it, we don't want it. I have a couple of groups like that with heavy tribal and some of the religious as well. And so that's what we did. We went and said, it's $1 a month. It's going to come out pre-tax. And if you don't want it, just say you don't want it. We won't charge you $1. And, but Ryan, you might chime in, but when you see a group that has 100% payment, you kind of expect to see all eligible population on that from an underwriting perspective, correct?
I mean, yeah, they expect it, but I don't know that underwriting really adheres to it. I mean, I have groups that contribute 100% and have waivers for religious reasons, and underwriting they don't balk. So yes, I think the expectation is there. And so a lot of groups just do 99%, not 100, to give that opportunity to waive, but it's not a big deal on the Blue Cross side.
Thank you.
You're welcome.
Grady County Jail, they pay 100%, but they have like Medicare waivers or stuff, but
But Marlon, you're asking if we do go, so if I'm understanding you, yes, if we do go ahead and put them on there and pay them, where does their 4,000 go? Is that what you're asking?
Yeah, because we're paying most of them anyway, even though they know they're not gonna use it.
Right.
We
it's still
pay it.
I mean, your 4,000 would just sit in your cumulative account at difference card and give you a better opportunity for a reserve at the end of the year.
and that's something that you guys have talked about wanting to have like wellness memberships or something. That's where at that end of the year, the bucket of money is extra reserves. You could use some of that to pay for gym memberships for members of, for the next
Too
year.
much information in my question. If I go to the doctor one time and I have $3,900 left on my, can I just have that?
No,
It goes
that
back
is
to the
the
county,
county's
but
money.
you as commissioners can decide to give
Yes.
it out as a stipend or an incentive.
Yeah.
Okay.
But it's
They
the
have to
county,
pay it back to
stays
the
with
county.
I
It's
mean,
come from the
So
county.
HRA money is not really the employee's money until they spend it. It stays as your money.
Yeah.
And so, and then if you do give that out, then you've got to determine, is it gonna be taxable? Is it some other benefit you're giving that would not be taxable? And you get into.
So do you have any other companies that you insure doing that you know of,
That
giving that money back?
what we usually see, I mean, you all are so generous paying 100%. What we usually see when they have a healthy reserve built up is they do a premium holiday. So they'll say, oh, in the month of December, we know you're buying Christmas gifts, so you don't owe anything for insurance this month.
So
That's the thing that's most common that I see.
to her point, most employees at best are paying around $100 a month. For employee
120
only,
is benchmark.
benchmark.
Mhm.
So giving a premium holiday for that amount, but it's really up to you on how you use that. You can go any direction you want.
Yeah, my hope is that, year one, you're one of the 4 out of 5 groups that have that reserve built up. In year 2, odds are even better. So we're gonna look up in 2 or 3 years if you keep with this strategy and have a healthy reserve. And then as rates continue to climb, we have the money in there to pay for the premiums. And then we have the money in there to do wellness initiatives or employee benefits of some sort.
Or even be able to contribute towards dependent tiers if you wanted, help pay for dependents to be covered, is a possibility too.
Okay, thank you.
Did we answer the question? Oh, sorry, we really.
We went-
We went down a rabbit
Yeah,
hole.
we got 4 different things. He's like, hold on, I think mine was more simple. Yeah.
I make things difficult.
No, we didn't. We made it look easy, yeah.
Did your dad tell you that?
Yeah.
So did mine.
You know, we went to it.
Yep, or, so the last thing I wanted to bring up was Insure Oklahoma. So on your first page, that very last column, that is the Insure Oklahoma qualified plan. So you'll see the rate on that is $900. So again, that's under your OPH&W rate. That plan has a $1,000 deductible with $3,000 total out of pocket in any calendar year. So even if you bought that plan for all employees, let's just say you're still under. But that plan is going to only be for people that meet the Insure Oklahoma income guideline. This kind of shows you, this stapled sheet, what that looks like. We know not all 14 are going to sign up, and we know not all 14 are eligible. We just knew the salary they made here to see if they qualified, but we don't know what their working spouse makes. So I gave you a couple of different scenarios. Page 1, let's say that all employees qualify, which we know won't be the case. But the state has this program set up with Blue Cross, it's called Insure Oklahoma. They will actually subsidize 60% of that $900 rate back to the county bank account for anybody who signs up. They pay 85% for spouse and children. So if you have any employee that works here and they say my children are in sooner care, they pretty much automatically qualify for that. And so then you can say, you as the employee get 60% of the cost of the insurance subsidized back to the county, and you can give them no out of pocket. 0. So then too, if you have any employees that, they have, a spouse that only works part-time maybe, and they have 2 or 3 kiddos, they may say, oh, I am definitely on that income guideline chart. Now I only have to pay 15% of that family premium to insure my whole family, because Insure Oklahoma subsidizes the difference.
So on this exhibit, you see this I'm gonna call it orange for lack of a better, the header. If you look at the employee amount monthly, that's what that employee would pay for even dependent coverage. So nothing obviously for employee only, $292 a month to cover a spouse, $217 to cover children, $374 to cover the whole family. The difference is you would be funding the 552, and then 225 on those, and then Insure Oklahoma subsidy, you can see in that next column, is funding the majority of that. So for those people that are within those income guidelines, it is literally life-changing for them financially, and insurance plan as well, because their out-of-pocket is now down to $3,000 and their deductible is $1,000. So
We got one employee that qualified for that, sure. He's adopted his kids, he's got 2 young ones, and his wife is on.
Yeah.
Well, they ran a report for me and I have
We
it
did.
somewhere, but I don't know where, because 2 different offices, but there were 28 people on the report that would qualify, but again, we don't know what their spouses
Right.
make. But when I looked over it, I seen several people that I know that I've spoke to that their spouses doesn't work that would qualify. I think you guys all have one each in your district, if I remember correctly, that would qualify.
if you go to the back pages, Caitlin gave a lot of great options here, but we did, 14, 10, and then 5 is on the back page. So 5 people
Let's
qualify.
recommend only 5 plans, let's say 1 in each district or 1 or 2.
But that's still almost $66,000 back to the county. And you look at the impact it has on what's coming out of their paycheck to insure their families. That is, really life-changing for where they're at today.
So the more they sign up, it goes down for the employees.
Well, it's gonna be a static amount, but,
It's
It's
more back to the county.
more back to the
essentially,
county.
Is the difference. The more that the county has signed up, the more money they get back, because right now they're paying 100% of the cost. So if they all of a sudden get 14 to sign up, now they're getting 60% back on every single $900 raise.
yeah, you referenced someone that has
14 people.
Yeah,
Yep.
someone that has a couple of kids that may qualify, right now they're having to pay $713, or they will have to pay that will be their share. under the current plan, if you look down under insured loan, if they qualify, that drops to 217. So basically a $500 a month difference. And that money's being paid by the state subsidy.
It's, through the tobacco settlement endowment trust, so every time someone buys cigarettes, the tax they put on them
Yeah.
goes into Oklahoma fund. Yeah,
Mid-plan year, spouse gets a job, but they don't qualify anymore.
mhm.
Does that change everything?
It does.
mid-plan year?
It does. Insure Oklahoma, they check it. It's linked to the Department of Wages, the Department of Labor. So they know when the employee fills out who they are, it already knows what their wages are in their household. So it tells them right then and there, you do qualify or you don't qualify based on that.
So then they would have an opportunity then to amend their elections because they would Insure Oklahoma would notify everybody that, hey, this person no longer qualifies. That's gonna be a significant change of rate for that person. So they get the opportunity to basically have a 30-day window to change their elections. So they could make a change instead of just having that forced upon them.
And Insure Oklahoma and Blue Cross say it's a qualifying event too. So if you have an employee that works here and their spouse had a job but is no longer working and then it throws them in, they can come onto the plan too.
I will chime in and say, this is Ryan with Blue Cross. This is one of the biggest reasons we do have groups leave OPH&W and move to direct to Blue Cross is for the Insure Oklahoma subsidy programs. Because OPH&W, because they are a self-funded account, the federal government and the state do not allow funds to be subsidized for self-funded accounts. And they only allow subsidies up to groups of 250 employees. And as you know, OPH&W is much larger than that. So they never could qualify even if they wanted to. So we have a lot of small counties move to Blue Cross Direct just for the subsidies.
This is how us young wound up being able to get benefits for their employees. They didn't have them for years and years and years.
Yeah.
So is the Insure Oklahoma available to just those 14 and we can pick a different plan for the other?
Yeah,
We would offer that Insure Oklahoma plan and always keep it out there, and it would only be available to anyone that qualifies. Everybody else would be on a program with the difference card. Either a Stillwater plan or non-Stillwater plan.
I like a different card just because, it's not like the health savings account, because even military people, am I not correct?
that's correct.
They qualify for the different card. Who was the other people? There was military,
You
tribal.
are Medicare eligible or tribal, and tribal can depend on. Potentially you could qualify to contribute to an HSA, but. It just depends on if you've used the benefit in like a year, the Indian Health, so,
But
yeah.
with the difference card, everybody would qualify. There'd be no, right? Am I right? There's no stipulations.
Correct. Yeah, cause it's employer dollars, it's not. An employee contributing,
It's not a tax advantage.
and it's not a
account for
tax
that
advantage
number.
account, yeah, for them. And one thing too, we had this question at another group with Cassidy was that, because your plan year is July through June, but the deductible and out of pocket is January through December for most groups. The difference card is written as 4,000 for the rest of this year, July through December. And the 4,000 starts again in January. So
It
they
follows
have
the
underwritten
deductible.
it for it follows when the calendar year deductible.
So it follows your accumulation period rather than your plan year. So your employees are gonna have $4,000 from July 1 through 12/31, and then it's gonna reload on January 1 for another 4,000.
But then the plan, if it doesn't renew in July, how does that work?
They would just do the settlement as of it terminating in July. They're well aware that your plan year is a July 1, but they underwrite based upon accumulation periods. because that's how the claims are gonna flow with the members.
Okay.
And then Ryan, question for you, when we do, group takeovers that don't have a January renewal, because groups every January as an employee, wherever I work, my deductible and out-of-pocket start over every January. So what we do when we have access to data is we get a, deductible and out-of-pocket run report. So it'll have every employee of your name, who has met what portion of deductible and what portion of out-of-pocket, and the carrier applies that to their account. So if you have someone that, had surgery in August, let's say, and they've maxed out their $7,000, then they shouldn't have to pay any more. So that can be applied to the Blue Cross Blue Shield plan.
For the rest of the year.
Yes, until it starts over in
So
January.
it works just a little bit different with Blue Cross and OPH&W because OPH&W currently runs on a 7-1 to 7-1 plan year. So when we have OPH&W groups move to Blue Cross Direct, we actually give them credit from 7-1 of 2025, their deductible all the way back to 7-1 2025, and their out of pocket all the way back to 7-1 2025. So you're basically getting an 18-month accumulation credit because that's going to run all the way through 1-1 2027. Does that make sense?
Yes.
And we do that all internally. So that's a process that I'm familiar with. I work with the OPH&W rep. She sends me the report. I get all those accumulations added to the member's account on 7-1 effective date.
Yeah. And that's great because when
and
you
then
go
moving
out,
forward, you'll move your calendar year, your plan year will move 1-1 to 1-1.
and that's great because I've had groups ask for that report from OPH&W and they say it is not available. So we can't, know
No,
that.
we do it all internally. It's an
Yeah.
internal process.
So I just wanted to point that out, that no employee is at a detriment if they are someone who already had surgery or anything, they're not losing out on any credit of their plan.
Good.
It's actually a better benefit because if you guys stayed with OPH&W, you would start over July 1st.
And talk about giving you an opportunity to have that reserve at the end of year one.
Yeah. Yeah. That makes me feel even better about the 4 out of 5 chance. Knowing that they'll give you 18 months of credit. That's great.
Well,
I don't know.
you did something right around there.
Talking about your favorite subject.
Yeah. Yeah.
She already knows.
Not
I know.
yeah. Not a big decision at all. The fate is in your hands. No, I'm kidding.
I'm gonna save us money. For that,
And it's a better benefit for the employee too.
we look at what's actually going on with OPH&W and a lot of big players leaving,
Yeah.
and we're gonna get hit with another big 100,000
Next year.
next year.
Yeah.
There's no way around that. And it might be more if everybody's leaving, they're gonna have to
It will
come up with
be
some
more.
money somewhere.
Yeah. Because they're gonna start off, and I've had several people call me, not just brokers, but several other municipalities and counties. And I gave you guys all a copy of the actuary report that we got in January. I personally have not read it, haven't had time, but they are 10 million behind, not 5 million. So they're gonna start this plan year off 5 million behind again. So it's inevitable that there is gonna be another special assessment next year.
So if we leave, I'm asking you guys' opinion on this, if we leave this year, we already know they're 10 million behind, they're only trying to get even by 5 million. Can they actually come to us next year, even though we've left? Since all this happened when we were here?
Now, from everything we've seen, this is really a cash flow issue at OPH&W and claims payment. So, when you think about a self-funded plan, you pay those claims as they come in, right? When they come in, you gotta pay them.
Yeah.
But what they bill every municipality and county is a set amount, employee only, employee spouse. So they've had to use credit lines to be able to fund those claims until it catches up, reimbursements come in, all those type things. as claims are getting bigger and more expensive, I think that's what's put a lot of pressure on that internal mechanism that they've used for so long. So the assessments isn't really about punishing you for your claims. It's about how do they continue to be able to fund them timely as they're required to and maintain cash flow. Because the other thing I understand is they bill you in arrears. So you think about that, they're way behind and it worked for a long period of time. But as claims have gotten more expensive, drugs have gotten more expensive, they're having to front a lot more money. So I think I would agree with Melanie that future assessments are definitely probably gonna have to be on the horizon. You know, the other thing, just from, you know, we've ran association programs in the state of Oklahoma many different times, and inevitably what happens is there's always a catalyst for our healthy members on those associations to go out and look elsewhere. And if they can go out and look elsewhere and get a better deal, they're like, why? I mean, I love the association, but why would I stay? That, we call that a death spiral. When healthy populations start leaving, then what's left in that association or in that group becomes the adverse risk, the unhealthy population. So, you know, depending on how many people leave, and I don't have their bylaws in front of me or know what this is, but generally speaking, a 10 to 15% shift in enrollment constitutes an underwriting trigger that the group or that collective group of people can be re-underwritten.
The stop loss carrier.
And I would imagine the stop loss carrier behind OPH&W has that same thing. So depending on how many people leave, or really, I guess, depending on if you stay, there could be mid-year rate action depending on what settles out after July 1. Have no idea of knowing, is that going to be good or bad? It probably won't be good. It'll probably be bad because from what I'm hearing, there's going to be quite a few less members in the OPH&W pool come 7/1. So that has to be, they have to look at it just to stay solvent and go, okay, are the rates we charging correct? So does that mean a 1/1 adjustment to rates? And, you know, they've got to give advance notice of that. You have to notify your employees, you know, at least 60 days in advance of a material modification, and that would definitely be one. So I don't know. Those are just some of the risks when I look at it, and having been involved with associations and large pools, that we start to see the unraveling. You kind of know what's coming, and that could be kind of where this is heading now. And I think the assessments have been a catalyst to cause a lot of people to start looking. So the people that can pull out and save money are generally going to be the people, and they're the ones that the pool needs, you know, probably the most to stay solvent. But you also have to look at your budgets and go, how much can we afford? How much more of this can we take? So.
Right. Yeah, because the city of Duncan pulled out?
Yes,
They were one of their bigger.
Yeah, larger one.
their special assessment was 500,000.
There was something in the meeting the other day that was said that made me think that since this problem happened, while we're all members of a member pool, then we're all responsible even if we leave until it's fixed.
I don't read anything in the contract.
Yeah,
that
so
says
I
that.
think once we leave and we're on a new plan, like, I think what you're asking is, so if we go to Hub next year, like say they have another special assessment in January of next year, we won't be responsible for that
I
because
would
we're not
sure
with
hope
them
You'll-
anymore.
Yeah, you termed your contract, that's.
I didn't read anything in the contract that says that. Only thing in the contract that they can, after we get ends, that they can charge us is the overruns.
Yeah,
Anybody
Yeah,
anybody that went to the doctor, you know,
before July 1.
yeah, before July 1 that hasn't been paid yet, we will have to pay.
Mm-hmm.
Which I think Tony explained that well last time he was here.
Mm-hmm.
But it would be like in 1 month the premium and then it'd go down each month. Because that
Yeah,
would
the
be
first one
trickling
will be
in.
the highest. Can we put a sheet in your folder? It's called year one exit costs. These were just us estimating based on seeing what claims per month you all had. And so what we did was we took 12% as the high end, 8% as the low end. This is what it could look like if they come and say, hey, you had employees that had a hospital visit in, you know, June 1st, and it's just now going through insurance and you have a bill owed.
And we know Blue Cross is probably the most efficient at claims flow and speed of claims, so we feel really good at the 8 to 12% estimate. Because they do have it figured out to make it really simple and easy on not only the providers, but the members too, so.
And when we do your open enrollment meetings, we can tell all employees, you know, if you have prescriptions, get them filled in, you know, the end of May, beginning of June. That way you as the employee don't have to wait for your ID card. You can just get your medicines filled in, get your last minute things done, and your new card comes for July 1st.
And then we will, so this is just health insurance, and then we would do dental and vision as well.
Yes,
Okay.
yep,
Division, still, was the
VSP.
VSP?
yeah, we would keep VSP. We
Yeah.
get more complaints on IMED than anything, so.
So we would want to stay with VSP.
Yeah.
Me too. And they're good paying their claims quickly, so.
Dental insurance, just that's all the way around. I
Yeah.
don't even understand it.
And then the other thing too is if we chose Blue Cross Blue Shield for dental, they will give you a 1% rate reduction on your medical plan too.
And that's what we have now.
Yeah.
So would we stay?
Yeah,
That's what we
I
have
would
now.
think keep
Yeah,
everything
okay.
status quo if we can.
So that,
there's not a good dental insurance out there. We will just
Not really, no.
stick
I
a
was swapping
five on every $100, so.
Yeah.
so that 590 would go down by 1%, just for having the dental, so.
So everybody would get what?
I mean, it's $5
Yeah.
per employee
Yeah, per month
per month.
discount.
And we already started, like, some of the process of, like, Blue Cross has already submitted us a dental quote. And then we just, sent them over the life and disability information so that we can match as much as possible. So we're just waiting to hear back from them and also the other carriers. Because Blue Cross Vision is not VSP, so we typically have to go outside of that.
And so that's my question to you guys is would would want to keep the $20,000 life insurance that we pay because we'd have to go through somebody else because that's through OPH&W. The $20,000 that the county pays, would we still do that or would we not do that?
I think life insurance is important.
Yeah.
I mean, we don't,
Yeah, it's a nice benefit.
thankfully, very few times have we ever had to use it,
Right.
so, you
Yeah.
know, it's.
And that's probably the easiest thing on the page to check off, to make the life
Yeah.
insurance.
Yeah.
And it's the lowest costing too.
Okay. Cause we pay $650 a month per employee now.
We'll match everything. We'll try to do same network, no disruption. It's just the medical will be the message.
Okay. I like it.
You guys,
And we'll roll the life insurance with,
with you guys, is it possible that our family member only have dental vision? Without
the-
having medical?
Yes, it is. It's not all or nothing. So the employees can pick and choose which
But,
policies they want.
but he's asking if the employee's not enrolled, can a family member enroll?
No, the
No,
employee,
the employee is enrolled,
Mhm.
we're on insurance.
Mhm.
But you don't have your spouse covered with health insurance, can we just put vision and
Yes.
dental on?
Yes, I misunderstood what you
Yeah.
asked.
Okay.
yeah, it's a à la carte menu. So it does, you don't have to have one to have the other.
Yeah, your enrollment can vary on every single plan.
Okay, and children, it's good up to what, 25 if they're in school?
Up to age 26, and it doesn't matter if they're in school or not on this plan.
Do they have to live in the home?
Doesn't matter if they live in the home or not.
They can even be married.
Oh, the OPH&W is 26 as long as you're living in the home or in
if you're
Holland.
married with a child, and the child get covered too.
Okay, so. Good. It doesn't cover babies having babies.
Yeah, that's the other thing that doesn't do.
So,
Like if you have your daughter on the plan and she's 25, but she has a baby, it's not gonna cover their grandbabies.
it's not gonna.
But would it cover
Yeah.
pregnancy?
No, she needs to get her own plan for the pregnancy.
Gotcha.
Yeah,
She's younger?
yeah, yeah. If she's younger with, as long as she's under 26, she can be on the plan.
Well, right, but I'm saying,
It won't cover the baby or delivery.
No,
if
At all,
15 years
no,
old,
but it,
15
the,
years old and
yeah, so
it
the,
would cover, it doesn't cover that.
No,
we would guide that person to Sooner Care, to the
Mhm.
young lady on Sooner Care.
Yeah,
And that's
Sooner
what
Care
everyone,
plan.
that's what has to happen.
yeah, they put all mothers on Sooner Care, and the delivery's free.
Better benefit.
Yeah.
Yeah, so the Affordable Care Act that allowed dependents to stand until age 26, stipulated you don't have to pay for your babies having babies on the plan. So very, very few of them. A few self-funded plans do, but very few.
And no offense to anybody, but you want them to come off and go to Sooner Care. You don't want that claim because typically there's high cost claimants in young pregnancies, so
Sure,
NICU babies and things like that. So just the underwriting in me.
Yeah.
What's the stipulation from Sooner Care?
So Sooner Care is available for all mothers if they're under a certain income guideline for the mother, and then all the babies have, so there's Sooner Care and then there's Sooner Care 2.0. So Sooner Care 2.0 is the adult version, Sooner Care regular is the baby version. So as the mother has the baby and they're qualified, all of their prenatal checks are covered at 100%. When they go in for their well checks and their immunizations, those are covered at 100%, and it even gives them dental too.
Wow.
And
Okay.
you remember
That's income based, household income based or
Yes.
just that person?
If they're married, it will go off the household.
But if they're a 24-year-old female, it's gonna go off of their income only,
Okay.
regardless of where they're living. So,
There's a chart too.
and you remember us talking about our claims advocacy team? They're available to help people navigate that, walk through it, and get them connected to the right resources. So they're not having to go out and try to figure it out themselves.
Okay.
When do you want a decision?
Today,
When do you have to have it?
today.
When do y'all have to have it?
I have to have it today because we got to open enrollment. You're stressing me, Marlon. Yeah.
I have no comments. Yeah.
We gotta get
I
people
don't know.
enrolled. If we're gonna do it, we gotta get people enrolled. If not, we gotta get people because I gotta get them in the system.
Yes, ma'am. Yes, ma'am.
Ryan, if you get the, let's say that they let us know in a few days that yes, they're going to move forward. Can you get the claims file from OPEH&W on prescriptions and run it, or did they have to request it? Because you said you could get medical.
No, they would have to get it because my understanding is OPH&W, I think their PBM is not with Prime.
It's Express Scripts, yeah.
Yeah, so I would not be able to get that.
Okay. But you can get medical, just not pharmacy.
I mean, so.
Well, I can do I can't get it, but I can request the accums to be moved over. Yes.
Yeah, they just won't let her have her hands on it, but they do it in the system.
No, I am not allowed to look at anything OPH. No, I do not have access to any. I just request it and then they do it for me.
And I think the information that I sent you, the prescription claims total is on there, and that's all that I'm able to get as well, is just the total.
So I know Dina Pride, for a fact, she works with Ryan at Blue Cross.
Mhm.
She's had other OPH&W groups give her a file with the headings she needs. It is possible.
Okay.
She's told me she's done it herself on some other cities and counties.
Okay.
So that's just up to them if they want to release it.
Okay.
And then if they don't release it, does that change your underwriting?
No, it doesn't change your underwriting at all. The only reason I asked for that was just so we can help employees that are on medications and give them peace of mind.
Yeah, it's a disruption. It's just to show who's going to be disrupted.
It changes the messaging a little bit, because if we can't get that, we're gonna have to really spend some time talking about, take this formulary, compare it to what you're taking now, get with your doctor, get this filled before the end of the month. And a lot of times it's a simple phone call to the doctor that, hey, I'm with Blue Cross Prime now. I need you to change from this drug to that drug. And they can do that on the phone.
And it shouldn't be very many. I mean, it's usually a handful.
I'm just looking forward to Melanie's point about open enrollment, preparing and everything. And then, the most important thing is getting the enrollment information to Ryan and her team in time for that to be loaded, processed, and ID cards in hand before 7/1. So we always try to just work backwards from that. And we still have dental, vision, life, bless you.
Bless goodness.
To get through and get decisions on. The medical obviously is the biggest one. That's your biggest line item in the benefits. And that's probably the deciding factor of whether, we move forward to those next steps or not. We've kind of already started, but
Yeah, we've got that.
there's still a few more decisions to be made. And then, obviously the communication strategy has to probably be a lot more robust this year because of the changes that are being proposed at this point anyway. So, we certainly want to have enough time to get our minds wrapped around that and what's the best way to get everything communicated to all the employees of the county. So I would agree with Melanie, the sooner the better on a decision on kind of what way we're going, and knowing that we still have the life insurance, the dental vision to nail down as well. But
Set up the Oklahoma portal.
but those are smaller line items, obviously, than what we're dealing with here today.
And they should be, our goal is the same or better.
Okay, I'll give you one day to make a decision.
Yeah.
I mean,
Yeah,
yeah,
I know you gotta think.
no, I think I'm good.
So how big are we deal with a lot of municipalities that put a lot of money in their benefits because they're not paying as much as
like
private-
oil and
private
gas,
sector,
but they're,
right?
yeah.
So how big is that for you guys to keep people, attract people? Is that a big part of your overall strategy?
It is. A lot of people come to us for the benefit. And a lot of I've done over 300 interviews since I've been here, and
Wow.
probably more than half of them tell me they come to us because of our benefit package.
That's great.
My favorite saying, and Heather, just because she's in the interviews with me, is we're benefit rich, and
Yeah,
that attracts everybody.
that's great.
She said 200.
That's
300.
Okay.
Yeah, no, I've sat through
Probably
50 of those.
Mhm.
Uh-huh.
When we talk to employers and that are using the difference card, having that first dollar coverage starts to become, they quickly realize what a differentiator that is, that you've got the first 3,000 or 4,000 healthcare for free. So
Yeah.
that's why I wanted to bring that up,
Mhm.
because it does certainly go a long ways to those people. There are no out of pockets, no co-pays. They're able to just pay everything.
And that'd be wonderful.
Yeah, and the education piece it's so important as well, but when we're talking to employees about how this works, what is this new thing that, we're showing y'all, we really talk about it like a medical gift card. And that helps, it's a new concept, but when you phrase something like, oh, this is going to be your medical gift card for your benefits, that really helps the understanding. And the reactions that I get in open enrollment meetings are like, oh, I had a guy a couple of weeks ago in an open enrollment meeting. I was at a manufacturing plant, and he said, "Oh, this gets me off the hamster wheel of feeling like I keep on paying into something and
Fine.
I've never get anything out." So
Yeah, because when you have to meet that huge deductible.
Makes sense.
Or out of pocket. And then I do know Cassidy, I actually talked to her the other day and I was like, where are you going? She goes, I'm going to Chandler. I go, what, really? She enrolled another group in Chandler, like, was it 5-10 days ago?
Yep.
I think it was the day after we had our day before we had our meeting.
Yeah.
Because I remember
I was
she
like,
was, I was there
that's
yesterday.
awesome. Yeah.
Yep.
So with the opening, okay, are all these plans available to our employees?
So we want to narrow it down, because when we started our very first meeting, we wanted to look at layers of benefit. You have one right now, so even introducing multiple, I would say if you want, do one Stillwater plan, one non-Stillwater plan. Everybody's coming out ahead, and then insure Oklahoma only for those that qualify. So if you all are okay with it, I would recommend 2 plans, Stillwater, non-Stillwater. You're gonna have most people go on non-Stillwater, as we know. There's only 44 total claims in Stillwater, and they get $4,000. So that would be my recommendation, to keep it as simple as possible, since we're making it.
At least for the first year. We can add more.
Yeah, we
Next
can
year, but for the first year, all the
Yeah,
changes.
Stillwater.
And you might decide year 2, wow, we had such a claims reserve. We don't need to give everyone $4,000. Let's lower that. Like that's something that you might come to the conclusion on too, or you might decide you want to keep it the same.
And there's this equation that you can modify, whether it's $500 less or whatever, you can modify that as we go, instead of having to make sweeping changes that affect the out of pocket. Right now, you can do deductible and out of pocket and co-pays. That's really it. But with difference card, it adds another lever that you can, almost like a joystick, if you will. You can kind of go in any direction year to year that you want to go in.
Yeah, you're also going to get a lot more data. You're going to see how your plan's running. You're going to see if people are going to the ER too much, or, if we should mid-year say, hey, we got a lot of folks going to the emergency room when they really could probably go to their primary care or, their urgent care. Sometimes that's just education. You don't know unless, you have that data. So you'll have insight into how your plan is running too. All HIPAA compliant, of course, but that's going to give you some tools in the future years also to just know what your plan's running like.
And you'll get a level of detail of reporting from Blue Cross in addition to what Cassidy and her team can provide that'll be far better than what you see today.
We give you a monthly dashboard too.
And the Blue Cross team does a monthly report. We do our dashboard report. You'll have difference card reports. So, we talked originally about, the possibility of self-funding, and we've got this huge blind spot. We really have no idea what's out there. We'll know at the end of 12 months what's on your plan.
And the other thing I know that was really important to Melanie was Connect DME. She's had some really great success stories about employees using that. And so we went direct to Connect DME and we said, we don't want you to lose business in your account. So how can we work together to continue giving employees that benefit? And they said that they wouldn't have a direct contract with you all if you want to continue. And they said they would recommend putting like the 5 or 6 most common reasons employers or employees are using Connect DME. And if an employee goes and uses one, they're happy to give you like an invoice on that, and you can use the reserve fund to pay for that too. So that way they're not losing that benefit. And so we've already worked directly with them, and we have that list of what your employees are using, and they will work direct with you. So you won't lose Connect DME.
That's good to know.
Can a spouse and the employee be on different, like can the spouse be on the Stillwater and the employee on the non-Stillwater?
Unfortunately, Blue Cross won't allow that. The
Okay.
employee and spouse have to be enrolled in the same plan.
Dependents will follow wherever the employee enrolls.
Okay,
And that is common. All the carriers do that.
I thought that.
Yeah, yeah.
I'm just checking.
Yeah.
Never heard that.
Everybody has a different scenario.
Yeah.
So, we're used to that. Every household has different needs, so.
Yeah. Yeah.
Yeah.
Won't say which one, but one of us was for Stillwater and the other one doesn't care where
Yeah. Yeah.
it was.
Yeah. Well, we love open access. We have heard, Stillwater has started charging an additional fee when employees go there, like an additional copay too.
So if you see a doctor there for an office visit and they are a hospital doctor and you go to the hospital to see them, they charge the office visit plus a $350 facility fee.
Oh, I had somebody, that happened to
Yeah.
somebody here. Yeah,
It's not,
that did happen.
it's not right, but
I've had that happen.
yeah.
That's the same in Shawnee, go to ER,
They're horrible.
you get.
Yeah.
You get an ER bill, you get a hospital bill, and you get
Yeah.
a doctor bill,
Mhm.
Yeah.
and I open them up, and a lot of times. It'll be gauze, they'll charge you 3 or 4 times for everything, and
Yeah.
I'll take it in the business office and
Yeah.
this isn't
Write
gonna
this
work.
off. Yeah. Yeah.
And you usually walk out.
Yeah,
You can't,
$100
like,
instead of
just that,
$1,000.
yeah, it's a little
Yeah.
effort. on
You just
that.
have to ask. Yeah, that's the thing is a lot of people will just pay
Pay
it,
it,
send it
yeah.
off. So, yeah.
You have to look at everything.
Yeah.
If we try to like to negotiate.
Yeah.
So do you guys need a couple days to consider, or what do you guys want to do?
Are we gonna offer everything? Or are we gonna just pick a few and say, here, these are.
Oh, he was
Yeah.
here, he's
I was thinking for year one, because it's, you all have been used to doing the same thing for so long. So keeping the networks as close to the can as possible, same everything. And maybe doing year one, a Stillwater, a non-Stillwater. And then Insure Oklahoma only for those that qualify.
Let's push the Insure Oklahoma on the ones that qualify. If they wanna pay out of pocket for that. It's fine, but if they actually qualify, I mean, it's a no-brainer to do it.
Right,
but
Yeah.
We need to make sure we push that really hard.
right.
To save us a lot of money.
And those come help me do open enrollment, so they can help push that too when we first get started.
We can even
Right.
help them and get qualified.
Why would somebody not choose it? Just pride?
I don't know.
I've had some who are like, I had one group that we went and she was like, this is a government handout. I don't want this. And, you know, and then there are some who just don't think they'll qualify. And they end up qualifying.
Yeah, we had a lot that said they wouldn't, and we put their information in and they qualified.
It's a combo of
And it's
things.
private
Some of
too,
it's
I mean,
private.
nobody
No,
will
very
know.
private.
Right, yes, and I mean,
It's very
some of
private.
it's, they don't wanna give their information, not realizing the state already has their information, right? They already know what you make, where you
Yeah,
work.
if you earn a wage in the state of Oklahoma, they've
Yeah.
got your information.
If your kids are on student care, they know everything about you.
Yeah.
You know?
Yeah.
They're using the equivalent wage and tax for that, right? Yeah.
Yes.
So.
Yeah,
And they have the same coverage, it's just paid for, it's subsidized through
Yeah.
the state.
Yeah, it is literally designed for a working adult. That's the thing. It is not a Medicaid handout. It is literally designed for someone who is working through an employer, but they make a wage that's under that level.
They
So
carry
it's
the
not-
same Blue Cross card that every other member in your company will carry.
No
So
one
the
would ever-
doctor doesn't know, the providers don't know, no one even knows that the only people that know that they're subsidized is really the HR person that's sending the bill to Insure Oklahoma.
And. So questions ran out of my brain. Like that. And it's not a actual federal government deal. This is
It
all
isn't.
done by tobacco tax.
Yep,
Tobacco
exactly.
settlement and endowment trust, so.
And they increase their guidelines every April. And we just got their income guideline increased in April. It was like $1,000.
that's
For an individual. Yep, it is designed for employers. Yeah, yeah, no, the thing you can tell them, you know, if you're not working,
grant.
you don't get this. It is literally because you're working.
Oh, then I send it to
Oh,
them.
Yeah, right.
it's worded that way.
Yeah.
When you go to sell it, people word it as a TSEC grant
Yeah.
for anybody
is.
that wants to go there.
Mhm.
And that way they don't feel like the county qualifies for a TSEC grant.
Mhm. Yeah.
For anybody with the income qualifications.
That's
So that way
exactly
it's
what it is.
not- It's the county getting the grant and not.
Yep.
Not there, cause it's basically what it is.
That's
Right.
exactly what it is.
Mhm.
Yeah.
That's a good way.
Yeah, that way they don't feel like it's.
Yeah.
Going on. And-
Yeah.
Yeah.
And you may have employees that get to cover their family members that they weren't previously covering.
Yeah.
Because the other thing is that, as you know, when the government shut down, because of over the ACA subsidies, they did away with them. So people who were getting those on the individual market no longer get them. So if they were, that would be a huge benefit to them to put their family on.
Whenever open enrollment comes, are y'all coming to help Melanie?
Yeah.
And how many days are you anticipating that to take?
You tell us.
We'll wait for Melanie to tell us.
Yeah, if you have different, so some of the cities and counties, they work in different departments, so they'll want a fire, a police, the public works, so it just depends.
We do mandatory open enrollment and then we visit each barn. I used to do 3 days.
Yeah.
To take a barn a day
Yeah.
and then afternoons come up here and see everybody in the, split the day.
Yeah.
Then I'll do everybody at the courthouse.
Mhm. So, Lily
yeah.
Valle on our team, she does all of our employee meetings, so she'll be at all of those too, and she's bilingual if that's a need at all, I don't know. But she and then him and I and Katie.
Usually that's what we usually allow is 3 days for open enrollment. I mean, it might take a little longer since we're gonna educate everybody, but that's
Well,
what.
we could even do like, you know, one, like go and do like education meeting.
Yeah.
And then have the actual enrollment and they elect if you want, so that way they can think about it, talk about it with their spouse, whatever, if, you know, I mean.
And
And we
Cassidy
could do
comes here.
recorded.
Yeah.
Oh, good.
Yeah, Cassidy with difference cards.
So we're going
Yeah.
to have 2 open enrollments anyway, because American Fidelity, they're booked up, they can only do the last week of April. So we're gonna have 2 anyway. I mean, there's no way around it this year, because what we're doing.
American Fidelity probably will be a rainy day.
Yeah, they're coming, I was gonna tell you guys, the, last week of April. Is that Monday, Tuesday, and Wednesday?
Lee brought up a good point, can you schedule your your open enrollment while it's raining, so we don't lose any other work day?
You should try. It depends on how good the meteorologist is.
Like you picked this last week then, and we're gonna end it this week.
Yeah.
We were supposed to go out last night, that didn't happen.
I know. Yeah.
Okay. Okay. Jeez,
On you.
yeah,
Yeah,
you wanna say?
it says we can do it today if you want to. That's it.
Yeah.
That's what
It says to accept the contract, but we haven't actually seen the contract yet.
So. We're not gonna sign a contract today, right?
No.
No,
Okay.
we just need to decide if we're gonna move forward or not.
Okay.
And I guess that would be your motion if we're doing something. Yeah, we can't approve the contract until we have it.
Right.
Okay, I'll make that motion to move forward with Group contract when it gets here.
I'll second that.
All right, all in favor, say aye.
Aye.
Welcome to Lincoln County.
Thank you.
Thank you so much. We're so happy to work with you all.
You
We
bet.
promise to do a good job.
You have so far, I've been very.
We'll be watching.
We have.
Yeah.
on recording.
Exactly. Yeah. All right.
Okey dokey. Well, thank you. Is there anything else we need on that?
No.
Thank you guys so much. This is Ryan. I'm going to go ahead and drop off the call. Please feel free to reach out with any questions or comments, and hopefully I'll see you guys late April too.
Absolutely. Come visit us.
Okay, thank you guys.
Thank y'all. Appreciate it. Nice to meet y'all. Bye-bye.
That's a fun store folder, and then we gotta get you.
We should have been on the whole day.
Thank you. Sorry, the part, that's perfect. Oh, yeah.
Thank you.
So one more word.
I know that's thinking for us.
Oh, no, I appreciate it.
I really appreciate it.
Thank you.
Thank you. Thank you. Good to see you. Thank you so much.
Yeah.
See you. It's
See
good
you.
talking to you.
Yeah.
Yeah, thank you guys.
Thank you so much.
Thank you.
Appreciate it very much.
Thank you.
Very much.
Thank you.
Appreciate it. Thank you. We'll be in touch.
Have a good afternoon.
All right.
Thank you, guys. Now, can
Get on with your life.
The only thing we didn't really discuss is what would it cost us to subsidize like retirees between. I don't wanna do all retirees.
Okay.
Under 65, but what if we subsidize a little bit for our retirees and, the first year, let's just say they retired 64, 63, and just kind of subsidize it so they're not paying that $800 a month or $500 a month if they choose to just get insurance without the card.
Yeah, would you wanna do it the first year or after we have money in our reserves to do that?
I don't know, I'm just making the statement here. It's something I'd like to see. I mean,
And that really won't have anything to do with them, will it?
it's all.
It's just be something we decide.
yeah,
But, I think we need to have parameters. They have to have worked for the county for X amount of years and, and I think it just needs to be retirees that meet the old plan, I think the 401k plan or whatever it is we have now. I don't see that.
like working the 7 years and 8 months to be vested, is that what you're saying, or?
No, they need to have worked. 20 years for the county or 25 years for the county, age equals. Maybe the 80-year plan or what's the 90-year plan?
90 is now, yeah.
90 is now, but
Mhm.
it's not the same as what it was 5 years ago.
Yeah, they changed it 90, back in 2011.
But they changed the way or county retirement is. It's not pension anymore, right? It's more of a,
No, it's still a pension.
it's still full.
Uh-huh.
Okay, I thought they changed it to
No,
more of a, 401k type thing.
mm-mm,
Okay.
it's still pension.
So I think we need to figure out what that number is. So if you've worked for the county for over 20 years or something like that, and just reward them for longevity for the county.
Good idea.
But we don't have to make that decision today, I just would like to see something.
Yeah. Yeah, that would be a good,
Cause it would really only wind up being one or two at a time, cause you put the cutoff at 63 years old, and then we're 64, and we're just subsidizing for a year before they go off from Medicaid. That's kind of just thanks for your longevity. So anyway, that's what we can do later. Smoke control report.
There's not a passing it.
Renovation smoke control report. Did we pass the report?
you don't get involved in that anymore, do you?
Let me see if the sheriff is here. He told me he was gonna be here at 9:30.
I believe we have to submit it to the fire marshals for the jail. If they did finish installing all of the dampeners and exhaust in all those cells.
Yeah, Amy said on the smoke control for the jail project needs to turn into the state fire marshal for the certificate of occupancy.
Yes.
So we're gonna sign this and send it to the fire marshal.
Mhm.
So it's not,
We won't
we're
get a
not,
certificate of occupancy.
we're not
until it's
saying
signed.
it meets all the systems. It's saying, hey, when we're done with the construction, we will be ready for inspection. Okay. And this is what they're doing. Everything that's in there. Okay. Yeah, that makes sense. Okay, yeah, I understand what it is now. Yeah, we're saying this is how it was designed. Sending it to the fire marshal. He's gonna come out and look, make sure it meets the design, and we'll go through.
Make a motion to approve it.
I'll second it.
All in favor, saying,
Uh,
just please. I think it's favor if it's signed.
You think.
Got a sheet for my bridge. So we're about to go out, they're about to go out for bid on this one.
Is it one over Paw?
Yeah. 3450 road. I'll make a motion to approve it.
And it's just approving the title sheet.
The engineering's done, title sheets being sent to ODOT, and then all the pay items, everything we discussed on the 90% is changed, there's about to be sent, so yeah.
Okay. I'll second it.
Well, better say that.
uh,
All of them, no. And we're gonna do some transfers.
Make a motion to approve transfers.
I'll second.
Also, can I see it? Taylor needs it back today and then I'll bring it over to you.
Do I need to stamp it first before you scan it?
Yeah.
You should look.
Y'all can expend your solid waste funds after they get this money moved into that account. I know y'all's girls are waiting on it.
What you want? Yeah.
Let's see that one. I gotta get my other glasses because I read that all wrong. I make a motion to adjourn.
You haven't even entertained the motion yet, have you?
I'll entertain it.
I make a motion to accept all that.
Motion
I second it.
All right, all in favor, say aye.
Aye.